the next slide coming up is going to go in another area where you've gotten all these companies advertising they're going to do the ERC for your clients. So,
Well, first and foremost, before we even get this, I did want to add one thing verbally. Your clients might have been solicited by numerous companies who are trying to get them for this, and your clients, you might get into what I call the ERC surprise, which is you see your clients during busy season and they tell you they got the ERC. That you said we found a company that would get it for us. And this is scaring the daylights out of me, Lee, because I think a lot of these companies are fly-by-nights. You're never going to see them again. And you know how I don't know if you realize this, but the clients generally are paying essentially 20% of what they get as a fee. So if this company can elicit the employee retention credit, they'll take 20%. And then when the IRS finally comes around and says, no, you weren't entitled to pay it back, where are you going to get that 20% back from? That company's gone. In addition, you see what's going on with penalties. I'm concerned.
I am too. That's why I'm bringing up these scenarios. So
yes. So let's take a look at these scenarios. Excuse me. Pardon me. The employee retention credit claimed on a 941X, an amended 941 form. That's the only way you can do it now at this stage, can result in a refund of payroll taxes. The IRS is overwhelmed with these. So therefore, these refunds are being delayed. The amount of the ERC will reduce the payroll deduction on the business return. Wage deductions must be reduced by the amount of the ERC. Every one of these bullet points is important. Thus, in this case, the business's entity's return must also be amended. So you're not just amending the 941, you're also amending the 1065 or the 1120S here.
Schedule C.
Or Schedule C, yes, resulting in an increased tax or reduced loss. The pass-through entities will provide revised 1065 or 1120S K1s, and the individuals will need to amend their 1040s, as would Schedule C filers. I mean, this is becoming a burden. By the way, the ERC company that got your client this isn't doing this work. This is now on you. Of course, you're going to be charging for the client. They didn't count on this. Okay, they did not count on this. They might have. The 941 might have been amended by that company, but these returns weren't. There will be a delay in receiving the refund from the 941, potentially creating a cash flow problem. The larger the ERC, the longer the delay, the greater the cash flow problem. It's like a snowball leak. And of course, the taxpayer can wait to amend for the additional 1040 tax until after they receive the ERC, which will generate late payment penalties. And we'll maybe have to get penalty abatement. That's assuming, by the way, one thing, Lee, that they correctly were entitled to the ERC. That's assuming that what the company did for them was correct. And I keep saying, you knew this law. You're told your client they weren't entitled to it. Why? And the answer was they weren't entitled to it. That's you didn't give your client bad advice. They're giving your clients bad advice. You're the one with the long-term relationship. They could care less. My opinion.
Ready for the next one, which is really bad?
Oh, I've been ready for years, Lee. Go ahead. Here's our second scenario. The IRS disagrees with the ERC amount claimed and reduces it. Worst case, disallows it altogether. Assessment statute limitations for the ERC is what? Well, go to section 3134L. Limitation time period for assessment shall not expire before the date that is 5 years. This is a 5-year statute. After the latter of the date in which the original return, which includes the calendar quarter which such credit is determined, or date in which such return is treated or filed. What is if an IRS ERC adjustment is after the statute of limitation for refunds for the 1040, which is generally later of 3 years from the date of the original return was filed, or 2 years from the date the tax was filed, and then it's too late to amend the business entity and take full wage deduction. I mean, this is horrific. And again, the ERC company doesn't consider this. They don't. This is not their problem.
So let's summarize this a little bit. So let's take the worst case. The IRS disallows the ERC, right?
Right.
but they don't do it right away. They do it within the 5-year statute of limitations. Meanwhile, the statute of limitations for a refund has run out, so you
Right.
can't now put the labor back into your return to get a refund on your 1040 because you can't get the refund.
Right.
So you don't get the ERC, you don't get the deduction for wages. You've been had.
You have been had. That's what this is about. You've been had.
Yeah. So
Oh,
think about those things with your client. So
yeah.
anyway, there now let's suppose you decide your client decides not to amend his 1040 until after he gets the payroll tax refund.
Right.
So then you're going to look how to get him out of the penalties for late filing or late payment, right?
Yeah,
So
that's exactly right. And so you're looking at a penalty relief IR 2022-89, which deals with penalties that arise when additional income tax is owed because the deduction for qualified wages is reduced by the amount of the retroactively claimed ERC, your employee retention tax credit. But the taxpayer is unable to pay the additional income tax because the refund payment was not yet received. It's a vicious cycle, Lee. In late 2022, the IRS issued a release reminding employers who have asked about relief from penalties when additional income tax is owed because the deduction for that qualified wage is reduced by the amount of a retroactively claimed ERC, that consistent with the relief from penalties for failure to timely pay noted in notice of the prior year 2021-49, they may be eligible for relief from penalties for failing to timely pay the taxes if they can show, I'm going to say quote unquote here, reasonable cause and not quote unquote willful neglect for the failure to pay.
you
General
think
issues
you
that
think that they're reasonable cause but didn't have the money to pay it?
I don't know if that's reasonable. What do you think?
I don't know. I
I
mean,
don't know.
this
It's
is a rabbit hole everybody's going to get tossed down
it's a
here.
big rabbit hole, Lee. Yeah. Anyway, in general, taxpayers may also qualify for administrative relief from penalties for failing to pay on time under IRS's first-time penalty abatement program, the FTA.
Now, there's a little problem with that one. So, some other speakers I know, seminar groups have been suggesting that you use the reasonable cause first and not use the first time abatement.
So as not to waste the first-time abatement.
Yeah. So,
Yeah.
if you go read the IRM, you must take the first time abatement first, and it goes first before corrections for IRS. And look at what D, it goes before reasonable cause.
Yeah. You know, it's funny, Lee. We've been teaching that for years. You know that there's an ordering issue on first time abatement, and it's always been hey, that's that you use that first. You use that first. So I'm not sure where these other speakers are getting that from. I cannot find any backup to that.
Oh, there isn't any.
I don't think so.